Hello, this is Matt on the Moon Lambo channel, and my friends, there is going to be an XRP tidal wave of money flowing in. I've got three awesome stories. To me, it's just endless information, evidence of the direction things are going. I could not feel more confident. Take a look at this headline from the Daily Huddle. Macro analysts say trillion-dollar tidal wave set to flee government bonds for Bitcoin and gold. Yeah, government bonds not looking so hot here. But money's always got to flow somewhere, and I can't remember who came up with the saying. I'm going to have to paraphrase it too, but it's just quite simply, there's always a bull market somewhere. And so if money's fleeing something, it's going into something else. So the trick is kind of figuring out where is it going to go? Well, I firmly believe a huge part of that answer is crypto, and I think that the crypto asset class is going to outperform every single asset class by a wide margin over the next decade. I think that XRP over that same time period will perform substantially better than Bitcoin. And look, I'm not a maximalist of any coin. I'm not an XRP maximalist, even though this is an XRP-centric channel. It's just the idea of if these coins are going to have staying power, there's way less money in XRP, so it's easier to get this multiplier effect. I've got another article, also from the Daily Huddle, in which a cryptocurrency hedge fund, which, by the way, is institutional money. This hedge fund has invested in XRP, and the CEO and founder has stated, frankly, what I've been saying on the channel the whole time I've been running it, which is simply that XRP is going to outperform Bitcoin over this next market cycle. This is, I believe, the first cryptocurrency hedge fund on the entire planet. This guy's been around since, in this realm, since 2013. Tons, they have some serious holdings, and he says, yep, XRP is going to outperform Bitcoin. Then I've got this headline from Bitcoin Exchange Guide: outrageous demand for Bitcoin and crypto from retirement IRAs. My friends, the writing is on the wall. Now, to be clear, I do not have a financial background of any kind. I am not offering financial advice, and you should not buy or sell anything because of anything that I say or write. I just think it's fun to talk about these topics as an enthusiast and make YouTube videos about it. It's my most favoriteest hobby ever, and I am thankful that you're here. Also, go ahead and subscribe to the Moon Lambo channel if you love yo mama, because you know what? She loves you. She wants you to be happy, and if you subscribe to the Moon Lambo channel, you will find true happiness. And you know what? You are welcome for that, son. All right, into this first piece now. Weiss Ratings analysts are predicting a $1 trillion asset migration away from bonds and into Bitcoin and gold. In a new post on the macro economy, Juan Villaverde and Bruce Ng say bonds have lost their luster in the financial markets. As a rule, institutional investors have traditionally allocated 30% of their portfolio into bonds as a hedge against insane market dips. However, as the economic landscape has shifted, Villaverde and Ng say this strategy is clearly out of date. And check this out, because again, this isn't about one cryptocurrency, it's about the entire asset class. XRP is a part of the asset class. So money, ultimately, there's so many directions that things are going and progressing, and all of them, pretty much just about, are going to be fantastic for XRP price action. I firmly believe. But check out this quote. The hedge doesn't work anymore. That's because decades of hypergrowth in world debt markets, that plus massive money printing to prevent them from collapsing, has totally changed the financial landscape. After inflation, government bond yields are near or below zero and will continue to be for the foreseeable future. Even before subtracting inflation, yields are already near zero or negative. As a result, the classic bond hedge is now broken. Now, and then the piece continues here, so check this out. The analyst highlights the failure of bonds to prop up company assets during the pandemic dump this past spring. While they did have a small pump during the market crash, the gains only amounted to 1/3 of the dip that the S&P 500 took. As their utility seemingly wanes, the analysts expect at least a fraction of funds traditionally allocated to bonds to shift to Bitcoin and gold. And again, like my friends, I know that when people talk about this, there are a lot of people that are Bitcoin maxis. I don't know if these individuals are, but it's always Bitcoin, 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 Bitcoin. I get it, leads the market, but they're going to have all sorts of cryptocurrencies that have staying power ultimately. And I say ultimately thanks to utility, even though people don't sufficiently care about that today. And those cryptocurrencies that will have staying power as a result will have additional money flow in because there'll be a store of value. There's that opportunity. Think about it. If XRP needs to exist and needs to be used by businesses in order for them to conduct their specific business models, and that is the case for dozens of customers using on-demand liquidity through Ripple today, if that's indeed the case, if people are jumping in the space, institutional purchasers, or publicly traded companies, or even retail speculators, just pick whoever's jumping into the market finally, even if they're a little late to the game. If they start researching cryptocurrencies, might they be more inclined to purchase and hold XRP for the long haul if they say, this is interesting. This XRP thing needs to exist in order for businesses to continue to conduct their business models. Might that provide additional confidence in the long-term viability of XRP? I argue yes. I mean, it does that for me. And I acknowledge in the short term that XRP simply following the price action of Bitcoin, but it won't forever. Eventually cryptocurrencies, as you continue to see the maturation of the asset class unfold, you will see cryptocurrencies be purchased on their own individual merits. And that's why I think most of them are going to go to zero. There's over 7,000 cryptocurrencies and almost none of them do anything. And even if there are good business ideas attached to them, maybe you could just use a database instead. Do you need a new form of money for all of these business ideas? The answer, my friends, is no. No, no, no. No, 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 no. No, no. No. And so there we go. But here's another quote. Check this out. As we write, roughly $30 trillion is sitting in government bonds. Suppose 10% of that amount finds its way into gold and Bitcoin. That works out to an exodus of $3 trillion. And if that is split evenly, we'd end up with 1.5 trillion going into gold, which is 15% of gold's market cap, now about $10 trillion, and $1.5 trillion going into Bitcoin, which is 4.4 times its market cap now, about $338 billion. And here's the neat thing. Please understand this. This is so crucial. So many people misunderstand market cap. It's not that the case that if 1.5 actual trillion dollars floods the crypto market, it's not the case that you add 1.5 trillion in market cap to the existing market cap for the for Bitcoin they cited their 338 billion at the time of publishing anyway. It wouldn't be that. It would be substantially more, because you get a multiplier effect, because people will be paid more than the previous person in a general sense. I get it. Some people lose money because they panic sell. They're idiots. Fine, got it. But in a general sense, the amount of money that is flowed into the cryptocurrency asset class is minuscule. I know the market cap is, what is it today? It's 650 billion or something like that. It'd be like a fraction of that that's floated. I'd be surprised if it's even 100 billion. I remember I think it was JP Morgan, I could be mistaken, but in 2017 they did an analysis of how much money they thought actually went into Bitcoin, and whatever the market cap was at the time they did the analysis, they thought that, again, I don't remember the figures off the top of my head, but it was something like maybe 5% of that, of whatever the market cap was, 5% of that dollar figure was money that actually flowed in. The rest of it just got propped up because you get this multiplier effect as people jump in. And so people have a tremendous misunderstanding of what market cap is. But if you're talking about $1.5 trillion actually flowing in, oh my God, that will be insane. And again, XRP just follows Bitcoin. So even if it did all go only into Bitcoin, which I'm certainly not convinced of, even if, though, it's going to be good for every coin under the sun. And given that there's less money in XRP, it's going to experience a much more desirable multiplier effect, I firmly believe. That's my opinion. Take a look at this piece now. Crypto investment guru Dan Morehead names one altcoin to hold over the next 12 months. Excuse me. One of the earliest and most influential Bitcoin investors on record is revealing his top altcoin picks for the next 12 months. Pantera Capital CEO Dan Morehead first recommended Bitcoin to investors back in 2013, when Bitcoin was priced at just $104. At the time, he told investors that he believed it would soon explode through the $200 level. Oh, isn't that cute? $200 Bitcoin. It's so funny to think back, but because we have the benefit of hindsight, but this was bold. Think about, can you imagine saying something like that in 2013 and to say it with conviction? It's impressive. It's impressive because a lot of people did see all of this before it made sense to the rest of the world, but it is indeed all here to stay. Makes me wonder how I would have responded. Had I known about Bitcoin back in 2013, what would my response have been? I'd like to think that I would have been, visionary enough to understand the earth-shattering implications of all of this and the birth of a new asset class and all of the reasons it makes sense. I don't know for sure, though. Because even though I firmly got it in 2017, I did have the benefit of those additional several years after that. So there's more historical context, and my aha moment was when I realized that businesses, there are business models that couldn't exist without these things. And that was my aha moment. And specifically, it was XRP that led me to realize that. But anyway, now in an interview with Real Vision, Morad says he remains extremely bullish on Bitcoin, but he believes altcoins such as Ethereum and XRP will outperform the king of crypto in the year ahead. And this is a drum that I've been beating for the whole time I've been running this channel. I've been running this Moon Lambo channel with a silly ass name for just over 2 years right now. By the way, that is because I have a sense of humor. For those of you that are new to the channel, I'm not some sort of like weird like moon boy, as they say. I just think it's stupid. Like, I jumped into the world of crypto 2017 and I saw these idiots on Twitter saying win moon and win Lambo, and it cracked me up. So I just slapped those two together, and there you go. There's a channel because I got a sense of humor. Moon Lambo. It is the stupidest name out of anybody in the XRP community, and I say that with pride, my friends. But look, I've been saying for the whole last 2 years that XRP will outperform Bitcoin. You get the Bitcoin maxi trolls out there that just don't fricking get it. They got tunnel vision. They're part of an echo chamber. And to say, no, oh gosh, how could that ever happen? Well, it's really pretty simple. The cryptocurrencies follow Bitcoin, and there's the cryptocurrencies that have less money in them. They'll have greater asymmetric gains than coins like Bitcoin that have more money in them already. They just do. And I still think Bitcoin is going to continue to do well indefinitely, but it's just a matter-of-fact type of thing. And then there's this headline: outrageous demand for Bitcoin and crypto from retirement IRAs. As we reported, Michael Sonnenschein, or Shine, I don't know how to say that, whatever. Managing director of the Grayscale Investments, said the most extensive digital assets manager had seen inflows that are now probably up 6x what they were last year. Sonnenschein said in an interview on Thursday, quote, "It's some of the world's largest investors, and the allocations that they're making are bigger than we've ever seen before, and their time horizon for this is generally something over the medium to long term." Well, how about that? Not the short term, which is what retail speculators frequently end up falling into the trap of, just emotionally buying and selling without a long-term time horizon. Like, you're just not. I don't think anybody will do well, frankly. I really don't, and that's certainly true of the stock market as well. But this is why I'm saying there's going to be an XRP tidal wave of money coming in. And the writing is on the wall for those of us paying attention. And that's why I say to you, yes, you listening to this, congratulations. You did figure out something before the vast majority of other humans on the planet. And I will always acknowledge, fine, maybe we're wrong. Maybe it all goes to zero. But I really don't freaking believe that's going to happen. And I'm happy to share my everyday Joe Schmo opinion on this. But the piece continues. This growing demand can be further seen in the premium that people pay to get exposure to digital assets through Grayscale. GBTC shares are currently trading at a premium of more than 30%. This premium has been slowly grinding up since early October, when it was just around 6%. However, we are nowhere near the 132% premium people paid in March 2017. On-chain analyst Willy Woo said the following: "Wow, 33% GBTC premium, that's outrageous demand for Bitcoin via retirement IRAs. If I was a Euro-Pacific shareholder, I'd be wondering why the company is not getting in on that obvious growth business. Like Kodak revolutionized photos until one day it didn't run towards digital." Fair enough point, I think. However, it's not just Bitcoin that Grayscale users are after. The premium on other products is even higher than GBTC, except for its BCH product, as Bitcoin Cash, of course, which is actually on a discount, negative 13%. ETHE is trading at 170% premium, ETCG 43%, and LTCN at the most significant 2,259%. That's nuts, by the way. Trader and economist Alex Kruger said the following: when crypto heats up, premiums to net asset value for Grayscale products skyrocket. driven by dumb money buying Grayscale products from a brokerage. And so obviously if you just purchase yourself, you don't have to pay these premiums, but there are always going to be people that don't want to learn how to do that, to take on that responsibility, but they want exposure to the asset class, and that's fine. In a free market, buyers and sellers should be able to make such decisions. I personally just want to hold it myself. My crypto, it's all in cold storage. And, you know, I'm never going to keep anything on exchanges unless if something's on exchange, that means I just purchased it or I'm about to sell it. So that's where we're going here. But look, Grayscale here, they do own XRP, 18.94 million. Where is that the number? Sorry, no, that's not the number. 35.65 million XRP. Look, institutional money is in XRP. This is what we're talking. Grayscale is institutional money. There are like 6 different types of institutional entities, and so I don't know if I can rattle them all off the top of my head, but like endowment funds, insurance companies, public pension funds, hedge funds, you know, and so this is institutional money. This is what we're talking about, and they're holding XRP for the long haul. They're in it, man. And so that's why it's so cool. Like, you beat almost every other human on the rest of the planet to this. It's like, it's painful for me to invest in anything that isn't crypto because I firmly believe the direction things are going to go, if you compare the next 10 years of crypto to any other asset class, it's going to make you sick investing in anything else. And so that's not to say you shouldn't diversify. And first of all, I'm not offering financial advice, but I would never say that anyway. I do believe in diversification. But even so, holy hell, crypto is where it's at, quite clearly. So anyway, congratulations again. I will wrap it up there, though. I am not a financial advisor. I'm a simple XRP bot. Beep, boop, beep. Do not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Mambo.